Hey guys, I hope that you all had a nice weekend. I'm Perry,
And I'm Dennis.
and welcome to our weekly market recap session, where we will discuss this week's market movement and events and that of the upcoming week. Let's start our session by diving into our market overview. After the Powell speech and the monthly close on Wednesday, volatility dried up with the price still consolidating around 17.1k, just a little below the EMA 25 line. So in our last session, we discussed the two possible scenarios to keep an eye on. The first scenario was to move above the daily EMA 25 level at 17.2k, which is the blue line on the chart. If we manage to hold above this level next week, we could expect a movement up towards the EMA 50 level, which is the purple line at 18k, to test the resistance there. The other scenario was the possible rejection of the daily EMA 25 level, which appears to be getting weaker but is still managing to hold and consolidate sideways on right now. Unable to move above this level in the coming days, could push us lower towards the support area at around 16.1k to test the strength of the support level again. So now let's take a look at the total liquidations of this week. We can see that after our midweek session, the market has pretty much dried up liquidation-wise, and not much more can be said here, except that both the buying and selling pressure has dried up as well, with only 28 million longs versus 11.5 million shorts getting liquidated yesterday. This shows us that there is a lot of fear and insecurity within the market this week, where most traders are not taking any big risks at the moment.
Bitcoin dominance has been showing strength from the historical bounce area we tweeted about the last few weeks, with Bitcoin sucking up liquidity over the past week. If Bitcoin stays stable and Bitcoin dominance retraces back to the historical bounce level, we might still see the classic redistribution to the high market cap coins like ETH, Matic and BNB. But considering the movement on Tether dominance, people appear to be hesitant to cycle their money into the other crypto coins at the moment. It's interesting to see that Bitcoin dominance is trying to take out the resistance area at around 40.45%. It needs a big push or dump to take out this level though. The Tether dominance chart shows the amount of Tether being sidelined in the crypto market. When looking at the current chart structure, we see that the bearish market structure that started at the peak at 22 November is changing character to the upside by taking out the weak high. The coming week will show if we can print another high low and target the strong high at 8.53%. If that happens, Bitcoin will be heading for the range low again. For now, Tether dominance is at its own range low with strong support below it.
Now let's take a look at today's flow charts. Looking at the daily buy flow charts here, we can see that about 1.1 billion worth of stablecoins has been flowing directly into Bitcoin today. And by looking at the daily sell flow charts, we can see that 1.6 billion worth of Bitcoin and about 700 million worth of altcoins has been flowing back into stablecoins again. This is showing us that the majority of the market is still playing it safe both today and the rest of the past week, and are not willing to take any big risks until there's a more clear market direction.
Okay, now we're going to discuss the top altcoins of this week. Bitcoin showed a nice pump and caused green candles across the board on almost all altcoins. Of course, some coins showing more strength than others, especially TWT and Phantom. We researched both TWT and Phantom and looked if there were any kind of fundamental reasons for the pump. First up, TWT or Trust Wallet token. The FTX collapse has benefited the TWT token directly as users turn away from exchanges to non-custodial wallets. Crypto investors are reassessing their security and ownership of digital assets, which surged an increased level of interest in TWT, the native token of Trust Wallet. The price rallied further at the end of November, after the news that Binance integrated part of their services through the Binance Connect app. Users can now buy crypto assets via their Trust Wallet using the Binance trading platform. This all while being in control of the keys of their new assets. The Trust Wallet token pumped almost 22% this week because of that. And for Phantom, there were more fundamental reasons for the pump of around 24%. The developers of Phantom announced better cooperation with ETH and Matic and therefore look to establish Phantom as a solid partner for these chains. They also showed the monetary reserves that they have to show the long-term survivability of Phantom. With over 100 million in stablecoins, 100 million in other crypto and 50 million in non-crypto assets, they're trying to show that they have a big enough reserve to get through this bear market. And now for the DXY chart. The Powell speech this past Wednesday got picked up by the markets as a sign that interest hikes will be softened in the midterm future. This caused the dollar index or DXY to take a nosedive. It already started to form a bearish market structure, with the current price looking to close below a crucial support block. If it does, we expect more downside for DXY in the short term, which is bullish for stocks and crypto. However, recent weeks showed us that the crypto market lost its almost one-on-one correlation with the DXY chart. It's still an important indicator for market health in general though. Okay, and now for the upcoming events. The coming week is relatively slow news-wise. The most noteworthy event is the PPI, Producer Price Index rate, which is being published this Friday, the 9th of December. This rate is the inflation rate from the perspective of goods producing businesses and wholesalers. PPI inflation is often considered to be a sign of the coming trajectory of consumer inflation, as prices from producers are often transferred over to consumers through their products. A lower PPI inflation rates could indicate lower consumer prices over the coming months.
The current market outlook for Bitcoin the coming days is still to either break out towards the resistance and daily EMA 50 level at around 18k. In order to do that, we will first need to close above the local resistance and the daily EMA 25 level at around 17.2k. If we manage to do so, then I would expect the price to retrace at the 0.35 golden pocket level at 17.6k to test the strength of the support within the EMA 25 level before making a move towards that 18k level. So that's all for this week's market recap, guys. Be sure to watch out for these scenarios and tune in the upcoming Wednesday for our midweek market session. In the meanwhile, be sure to check out our Twitter and Discord channels for more fresh market updates and content. See you all next week and enjoy your evening.